Well, as some of you know, I've spent quite a bit of time recently trying to make Marx comprehensible. And it struck me maybe a couple of years ago that there's a term that Marx uses a lot, which is the term contradiction. And whenever he talks about crises in a system, he nearly always associates it with the idea that there is some contradiction that becomes heightened into an absolute contradiction. So I thought I would look a little further into how this term gets used in his work. And really there are three sorts of reasons why this increasingly seems to me a rather important thing to do. First is the irritating habit that Marxists, and I include myself in this, that we have, that when we encounter something that's totally incomprehensible, we smile gently and put our hands up and say, well, it's the contradictions of capital, isn't it? As if that's the end of the story. Secondly, in attempting to come to terms with what's been going on within capitalism in general over the last 5-6 years, it seems to me that there is still a real lack of understanding of exactly what happened and why, and a real lack of understanding of the relationship that might exist between that reality and what Marx's theorizing was about. So that is, if you like, a bit of an intellectual exercise, which I find intriguing. But most important to me, the more I've looked into it, the more significant it seems to me comes the idea that there are political implications from this, so that for people like myself who think that it's time that there was a coherent anti-capitalist movement in the world, and a serious anti-capitalist movement, not just a sort of I hate the thing, let's get rid of it kind of thing, that to the degree that there is a serious anti-capitalist movement needed, then we ought to know what capitalism is and what capital is. And one of the ways to look at it and understand better its nature is to look at the notion of contradiction. Now, when I use the term contradiction, I use it in a particular way. I don't use it in an Aristotelian way, which is an absolute exclusionary contradiction. I can't say that all blackbirds are black and all blackbirds are white. That is a contradiction, and therefore they're mutually exclusive. That's not what Marx is talking about. What Marx is talking about in a contradiction is the idea of an opposition internal to something, an event, a process, a person, a thing, which is pulling it in rather different directions, and it's an unstable internal dynamic, an opposition which is internal. It's the sort of thing you encounter, most of us encounter in one form or another. For example, how to square the longing for a decent personal life and career objectives. For some reason or other, particularly when it comes to something like family, this is supposed to be a contradiction that particularly affects women, but obviously it's much more widespread than that. And that tension can be lived with, most of us live with it most of our lives, but there are times when it becomes super hard to sustain it. And under those circumstances, individuals go into a life crisis and have to change something. And that life crisis can arise for a number of reasons, some external, the requirements of your job change, you have to move, or you have to have different times or something like that. So the external world is changing, so you have to adapt, and it generates a crisis. Or it can happen because your family circumstances, your home circumstances change, somebody dies as a divorce or something of that kind. And those situations then also connect sometimes to sort of internal epiphanies. Somebody wakes up one morning and says, for God's sake, I hate living this life this way, I'm going to do something different. Somebody can have a religious understanding of the world or something of that kind, or say, well, I'm not going to live this way anymore, I'm going to reorganize this relationship. So it is that sort of opposition that I'm talking about in Marx. And Marx starts to talk about oppositions of that kind throughout Capital. Now, I have to make clear at the outset, however, in talking about the contradictions of capital, I am not talking about the contradictions of capitalism. And I think it's a very important distinction. The contradictions of capitalism are far broader. They include all kinds of things about racialization and racism, gender inequalities, and all those sorts of issues, which are extremely important to look at and think about. And the whole history of capitalism is, of course, riven with contradictions of that sort. But what Marx tends to analyze is the contradictions of capital, that is, those contradictions that are located within a very specific system of accumulation and circulation of capital and the reproduction of capital circulation and the requirements of that reproduction. So it's a bit like taking that aspect of capitalism that is driven by this powerhouse which is capital itself, which is very important. And by looking at that powerhouse, we can start to see some of the things that happen in our society in certain kinds of ways. So in looking at it, I'm not going to be talking about the broader field of contradictions of capitalism, but talking about the contradictions. What I find very interesting in going over Marx's works is that you can start to see a pattern of contradictions. And this is what makes the analysis a little bit more complicated. Because the contradictions that Marx talks about are not isolated from each other. They exist in a relationship to each other. They feed off each other. And that makes for a rather complicated kind of story, and I want to try to simplify it as far as I can. At my last count, I had 17 contradictions of capital. And I have an hour, so you can see how much I could spend on each one. So I'm not going to obviously talk about the whole lot. Okay. I tend to think it makes sense to me to divide those contradictions into three different categories. One would be the category of foundational basic contradictions. Obviously, something like the capital-labor relation is a foundational contradiction. Then there are contradictions which are derivative but manageable in some way or other. For example, the distribution of poverty and wealth. Societies can actually, under capitalism, can sometimes move to a more equitable kind of society and then move in the other direction. It's not foundational, it seems to me, it's the same way as the capital-labor relation is. So they're derivative but manageable. And then there are three contradictions which I think are fatal and therefore have to be paid very careful attention to in terms of what the time horizon of the life of a system of capital accumulation might look like. I'm thoroughly convinced, for example, that compound growth forever is impossible. And we've reached an inflection point in compound growth forever, which is quite simply unsustainable and crazy. Marx himself recognized some of the difficulties that occurred with compound growth. He cites a paper that somebody wrote in something like 1778, who calculated that if you had a golden sovereign on the day of the birth of Jesus Christ, and you invested it at 6%, by the time you got to 1778, the gold sovereigns would have to fill the whole of the solar system, which is obviously something which is not a sustainable world to live in. So compound growth forever is impossible. But capitalism is about, and capital accumulation is about compound growth forever. So we have to really think, therefore, about, well, what might replace it, and can that system be replaced by something other than that which allows us, nevertheless, to live a reasonable kind of life. The second fatal contradiction is the metabolic relation to nature. I'm not going to go into that, but obviously there are serious questions being raised all over the place about that one right now. And the third one is what I would call universal alienation, which is a difficult one to talk about, but which has, I think, a very specific history, and again, I'm not going to talk about it here. But those three, it seems to me, are producing a situation in which the requirement that those of us who have the capacity to think, understand, and work should have in mind the displacement of the current kind of world in which we live by an alternative political economic system which has different implications for how life should be lived. So what I want to talk about, however, here is really simply the first 7 contradictions which are there, but I do it in a context which again is very important when you're looking at what Marx is talking about. Marx took the view that there is a serious way in which what he calls the fetishism of the realm of appearances disguises the realities underneath. He said once that if everything was as it appears on the surface, there would be no need for science. Clearly, he thinks there's a need for science, and he's trying to construct a science which is relating the world of appearance, the world of symptoms, with the world of underlying causes, the world of underlying dynamics. And in order to get to that, he has to de-fetishize much of what he encounters in terms of both our understandings of the world, but also in terms of the realities through which we live our daily lives. That is, the market that we encounter in our daily lives appears to be this way, but in practice what it's concealing are a whole set of social relations, and social relations which we don't see, which are terribly important to understand. We don't understand, for example, the whole question I already raised about what is the implication of compound growth forever. We don't see those kinds of questions. What we see is, oh my God, the growth rate's down to sort of 0.2%. We've got to do something to jack it up. Every politician in the world feels that they'll lose their jobs unless they get it back to at least a minimum of 3%. But that's 3% compound growth forever. You can't do it. So what we have is a world which is sort of appearing to be this way, with imperatives appearing to be this way, and a reality which is actually confronting it, which is completely different. So from Marx's standpoint, therefore, the defetishization of the world around was a crucial aspect of what the scientific endeavor should be about, and it was a crucial aspect of what his particular endeavor was about. So let me talk very briefly then about the pattern of the first 7 contradictions. The first contradiction, and I don't put them in any particular order, though the way I put them is neat for it actually demonstrating some of the interrelations. The first contradiction is between use value and an exchange value. A commodity, a thing, has a use value, has an exchange value. Take a house. It has a use value. We could describe what its use value is. It's a place of shelter. It's a place where people build an effective life, have a personal life, family, all this kind of stuff. You could just list a whole bunch of use values that attach to a house. And people need those use values and desire those use values. But housing also has an exchange value. Now, once upon a time, the exchange value was very, very minimal. If you were a pioneer out in the American in the West, you'd get your neighbors together, you'd cut a few logs and you put the logs up and this kind of thing, put the roof on, you'd use all the materials around you, the labor would be you and volunteer help, and you'd help your neighbor next time and so on, and the only exchange value involved would be the purchase of, I don't know, nails and axes and saws and things of that sort. In other words, the exchange value content was very minimal. The use value aspect was dominant. And that continued when people started to actually have houses built to order. When you employed labor and all the rest of it, exchange value becomes more significant, but nevertheless the use value aspect is dominant in the whole thing. Then comes the speculative building of housing, the Georgian terraces, for example, the back-to-back housing in Leeds and all the rest of it. So you get speculative housing coming in where exchange value starts to step in as being the prior aspect of what the housing scene is all about. And then another aspect of the housing comes in, the exchange value. That is, it not only exchange value of the people producing the housing as a commodity becomes significant, but the exchange value of the house as a second, if you like, a second-hand item on the market becomes significant, and the house becomes a form of saving for the people in it. And this particularly attached to the whole idea of home ownership. Home ownership was a way of saving and generating asset for yourself, and therefore people became very, very fussy about the value of their housing. People set up neighborhood associations to keep out aspects of the world they didn't like. They wanted to get rid of people they didn't like, and so the value of the house became very significant. You wanted to protect the value of the house because it was a form of saving. And then about 30, 40 years ago, housing started to become an instrument of speculation. That if I could borrow very, very cheaply and actually, get a house and flip it on 3 years later and it'd be worth another $100,000, I could get $100,000 out of it. So what we moved into over time has been a situation in which the use value aspect of housing has become more and more subordinate to the exchange value aspect. And then what happens in 2008? The whole exchange value aspects blow up. And what happens? 4 million, maybe 6 million people lose their use values. Okay. So here you have a situation where the exchange value becomes dominant, the exchange value blows up, and therefore people cannot get access to the use values which they really require in order to lead a decent life. And even when the boom was on, the housing prices were getting so high that it was very hard for anybody to get into it. So what you see there is a history of relationship between use and exchange value, which actually becomes, I think, a very significant history. And you see that tension between the use and the exchange value working out in different periods in different kinds of ways. Now, of course, over the last 30 years, we've been told again and again and again, you want use values. The best way to get it is to let the exchange value run. And this is true in higher education, it's higher in healthcare, it's true of healthcare, it's true of everything, okay? So we've moved to a world where exchange value is the driver. Now, what does this say to me politically? What would you rather do? Live in a world where people are being delivered use values, which are significant to their lives, or live in a world where people are accumulating exchange values? Some people are accumulating exchange values. That's the political point. That actually an anti-capitalist movement should be talking about use values and the provision of use values to everybody in a decent kind of way, and diminish to as much as possible the exchange value component. Now, the other interesting thing about exchange value is this. The exchange value can only exist if there is a way in which you can measure exchange value, and that way of measuring exchange value is money. Now, what is money? And is there a contradiction in the monetary form? Well, it turns out money is really a claim on social labor. And there is therefore a contradiction in Marx's terms between money and value. Value, he says, is a social relation. It's therefore immaterial but objective. But because it's immaterial, you need a material representation of it in order to get a measuring rod in the market as to what the value of this is. And the way you get the measuring rod is money. Now, is money a true representation of social value? Marx then appeals to a theory of representation, which is very interesting, that all representations, they represent some aspect of what it is they're designed to represent, but they also falsify others. This is true of maps. Maps are classic versions of this. But, and so what we see is a situation in which money is a representation of value, and it's a good representation in some ways, but a bad representation in others. And what is it a good representation of, and what is it a bad representation of? And of course, one of the things that becomes, I think, very interesting is that if value is a social relation, i.e., and social labor is involved in value, what we see in the money form is the capacity of individuals to appropriate social value as a form of social power. So the contradiction within the monetary form and its relationship to value becomes significant, and that contradiction connects, if you like, to the use value, exchange value connection, because you can't have an exchange value without having a measuring rod for what exchange value is, and that exchange value measuring rod is money. But money is a falsification as well as a representation. And that contradiction becomes, I think, very, very significant. And it becomes very, very significant when you connect it to the third contradiction, which is the relationship between private property and the state. You can't have exchange value without having exchange agents who are full owners of the commodity they exchange, who have unambiguous property rights over whatever it is, the house they're selling or the car they're trading or whatever. Therefore, private property rights are connected to the notion of exchange value, and private property rights are crucial, of course, over money. Now, the interesting thing both about money and private property rights is that they are property rights in perpetuity. That is, the time horizon of the property right is in perpetuity, which implies that you need to have available a money form which is in perpetuity constant, which is why initially the money forms chosen under capital were gold and silver, which are non-oxidizable metals. The gold and silver in 100 years was exactly the same quality and exactly the same weight and exactly the same qualities as it was, just right now. So this is so this relation then between private property, the exchange system, and the money system becomes very, very consistent in terms of, but what is private property in contradiction with? Well, in order to have private property, you need legal institutions. In order to have legal institutions, you have something that looks like a state and which will actually utilize a power in order to maintain rights to private property, to guarantee the rights of private property and guarantee the rights to contract. And the power it has is, of course, monopoly over the use of violence. And if you look and ask yourself, where does the power of the state reside? It resides in two things. One, it's monopoly over the means of violence, but also it's monopoly over the money form. And there's an interesting story to be told about how the maintenance of that monopoly over that money form has been set up. One of the things that you find in the United States, which nobody in Britain understands at all, is what some people on the right wing are saying, which is actually really very sensible. And it goes something like this, that once upon a time there was a possibility of real bourgeois democracy. And this is what Jefferson stood for, this is what the whole American tradition stood for. And that real democracy relied upon the capacity to have democratic control over issuing money. Therefore, when the Federal Reserve comes in 1913, it actually takes away. And when they look back, they see a moment in British history, 1697, 1698, or whenever it was the foundation of the Bank of England. And what was the Bank of England? How did that come about? It came about because the state wanted money to fight wars. It didn't have the money, so where's it going to get it from? It's going to get it from the merchant capitalists. So it goes to the merchant capitalists in the City of London and says, lend us the money. And the merchant capitalists in the City of London say, we'll lend you the money provided you give us monopoly over the currency in alliance with you. So the possibility of a democratic control over the currency was vitiated in 1697, 1698 with the foundation of the Bank of England. And the libertarian right in the United States says, get rid of the Federal Reserve, get rid of the IMF, get rid of the World Bank, get rid of all of those institutions which are anti-democratic institutions. They are feudal, monopolistic institutions which use their power over money issue to feather their own nests. Who's feathering the nests of Wall Street right now if it's not the Federal Reserve? The Federal Reserve goes into quantitative easing. Where does all that money go? It goes into the stock market. It doesn't go into your pocket or my pocket, it goes into the stock market. Asset prices are booming in some areas because the monopoly power of the Federal Reserve over being able to go do things, and the Bank of England is being utilized to prop up asset values and therefore to actually increase the social inequality in society by building. And this is the argument of the right wing in the United States, or the libertarian right wing in the United States, not the crazy Tea Partiers, but the libertarian. It's very interesting that they have a point. They have a very, very serious point about the whole kind of question of money and what the relationship of money issue and control over money issue is, and the perpetuation of certain monopolistic structures of political and economic power. So what this leads to is a tension, if you like, between individual property rights on the one hand and state power on the other. And it's been a perpetual tension. Now, I mentioned in the case of exchange and use value, well, what's the political point? What's the political point over money, and what's the political point that would come out of this state stuff? The political point on the state, I think, is very interesting. You dissolve the distinction between private property rights and the state by saying that actually what we should be looking towards is a kind of society where everything is a commons. And that therefore the only interesting question is how do you manage a commons? What would housing look like if it was considered a common property right? And actually there are institutions around that do look at housing as a common property right. There are land investment trusts, there are cooperative forms, there are and the like. But a lot of the left right now is into the question of the commons, and I think this is correct. It's expanding the commons. So we start to think about common property instead of thinking about private property. But common property, as we know, has to be managed. And it cannot just be left there, so anybody, it's not free and open access, it has to be managed in some ways for the common good. So by dissolving, if you like, the whole notion of the state apparatus in this kind of way, this becomes a very significant contribution to the movement away from the kind of capitalist society we now have to something that looks radically different. What about the money form? I find this fascinating. Money has a number of functions. It operates as a medium of circulation. It also operates as a store of value. It also operates as a measure of value. It has those different functions. As a medium of circulation, money is fairly neutral. The big problem with money is its function as a store of value, because as a store of value it can store social power. And when I said individuals can appropriate social power by appropriating money, they can store that social power and build, in effect, a capital class domination over society by building that social power through money. And like I mentioned, the reason why gold and silver became so significant in the history of capital is precisely that the gold and silver were not oxidizable. What would happen if you had a contemporary form of money that was oxidizable? That if you didn't use it, it would disappear. That is, it would operate as a medium of circulation, but it would not operate as a store of value. Because if you tried to store value with it, then it would just disappear. Well, actually, those monies were developed in the 1930s, some. Stamped monies. That is, at the end of the month, you had a chit or something which was worth, I don't know, £100 or something like that, and if you wanted to maintain the £100, you had to go to some office and you had to get it stamped, and you had to pay £5 to get your £100 renewed. What would George Soros do if he had to go take all his money into a bank and actually get all those things stamped, and he had to pay £5 for every 100 that he had? I mean, this is an anti-wealth, an anti-accumulation form of currency. Now, the reason that there was a connection between money as a medium of circulation and gold was this, that if I trade with you and I get money, and the money is in raspberries, then obviously it was likely to disappear, and it's no use as a medium of circulation. So you need something that's solid as a medium of circulation. But with electronic monies, you can specify how long they last. You say, after 2 months, if you haven't spent it, you lose it. Or you lose 10% of it in the first month, another 10% the second month, third month, fourth month. In other words, you can come up with an alternative money form. And the alternative money form would have completely different social implications. And the social implications, I think, were most beautifully spelled out by Keynes. In Essays on Persuasion, he wrote something like this. He said, when we get to it, he said, the accumulation of capital, we have tolerated some of the worst aspects of human character and human behavior in order to accumulate capital. Now we've accumulated capital, we're now in a situation where we don't need to do that anymore. So what do? We come up with a money form which simply functions as a medium of circulation and does not allow further accumulation. In which case, the lust for money has a wonderful way of saying it. The lust for money would be that which it really truly is, which is a semi-criminal, semi-pathological disease, in which people who still had it would be turned over to those people who are dealing with mental health problems. In other words, there's a completely different kind of society we're talking about by actually reform of the money system. But you cannot actually be anti-capital without actually starting to talk about the alternative forms of money. And we're not talking about barter here. We're not talking about the local economic trading systems and all those kinds of things. We're talking about a radical reconfiguration of the nature of money. And there are folk in the right wing who are looking at this, and there are people on the left who are looking at this right now. There are these computerized versions of exchange relations in which, yeah, if you don't trade, you lose your assets. These are, if you like, the first few contradictions that I'm talking about. There's a contradiction of use and exchange value, there's a contradiction of money and its value form, and there's a contradiction of the state. I mentioned that what happens out of these three contradictions is the possibility exists to do what I'm now saying has to be counteracted, which is private persons can appropriate social power in such a way as to actually form a class of privileged population who have immense, immense power in money form. And as time goes on, of course, that class becomes more and more conspicuous. Look at the processes whereby class is formed in China. It's not as if somebody came out and said, hey, we have a project here for forming a class. People started to get filthy rich because they could accumulate social power through private processes. And as they did so more of the billionaires started to come together. There are more billionaires in China now than there is almost anywhere in the world except in the United States. And that came about all in 10, 15 years, precisely through exactly the process I'm talking about. And you would need something radically different to have prevented that. But now we have this immense concentrations of wealth and power in the world. And what we see is the class formation, and that class formation is, of course, then setting about to have a class politics which is about the further accumulation of wealth and power in their own interest. And they will do it 2 or 3 different ways. Historically, they've never done it simply by exploiting labour in the labour process, which is one of course, the centre piece of what Marx was talking about. They've done it through initially what was called primitive accumulation, but by processes called accumulation by dispossession. I mentioned the housing crisis in the United States. In the population of the United States, the loss of asset values over the last 5 or 6 years has been absolutely astonishing. Of course, the impact has been racialized and it's been gendered. Amongst African American populations in the United States, they've lost about 70% of their asset value over the last 10 years. The same is true of Hispanic populations. The white population's lost about 28%. We don't have good figures on specifically the gender breakdown, but we do know that in African American populations, the women have been particularly hard hit, particularly single-headed households. So there's an enormous loss of asset values. In fact, the calculation, even before the main part of the crisis hit, because a lot of this was going on in 2003, 4, 5, and 6, before the main crisis hit was that approximately $40 billion were lost to those populations. $40 billion of assets. And this was during a period where the bonuses on Wall Street were about $40 billion a year. Now, I can't show that that $40 billion was taken from those people and ended up in those people's pockets. I can't trace it. But when $40 billion has been lost over here and $40 billion has been accumulated over here for shuffling bits of paper around, you've got to say that maybe there's some sort of relation here. In any case, even if there's no direct connection, you better do something about, the fact that that is where all the money's ended up. And when you actually do start to look about how Wall Street was making its money and how all of the stuff that was going on in terms of the mortgage companies and the lawyers and all the rest of it, I mean, it was predatory practices. It was not trading in the ordinary sense of the word. It was predatory practices. And the same is true of what's happened to pensions. I mean, I went down to Buenos Aires recently, and the woman, the stewardess on American Airlines, was complaining bitterly that she just lost all her pensions. American Airlines filed for bankruptcy, went to the bankruptcy judge and said, we cannot continue to function if we are liable for these pensions and these health care costs, so what can we do, judge? The judge says, well, get rid of them. So there she is, you know, she's been working for 15 years for American Airlines, and suddenly she's lost her pension. This is thievery, this is robbery. Okay. And it's not only going on, and what we're seeing is through the taxation arrangements, what we're seeing through the loss of services and indirect, you know, the social wage, all the rest of it, it's just thievery and robbery. And you would say, well, if there's a genuine crisis, yeah, but actually when you look at it, what you see is there's not a genuine crisis at all as far as the top 1% is concerned. In New York City, the 2008 income tax return showed that the top 1% earned, on average, $3.57 million a year. Okay. Half of the population of New York City is trying to get by on $30,000 a year. And you kind of go, well, you know, there's real... And that inequality is even greater now than it was even 10 years ago. So it's not as if this crisis has disproportionately brought everybody down. There is actually a political project which is going on worldwide, which is about actually robbing as much as he possibly can in terms of asset values and asset command, as much as he possibly can. And this is what the libertarian right is very articulate about. That this is not right, this is not correct. And a lot of it goes back to this whole kind of way in which those contradictions got set up. So the capital-labor relation, social-labor relation, is of course the obviously foundational contradiction, and you know, anybody who's read Marx knows what that's about, so I'm not going to even bother to go into it terribly much. That in turn is founded on a contradiction, which is a theoretical contradiction, and I'm not quite clear how it relates to this, what I've just been talking about. Because Marx argues that circulation, if it is in perfectly functioning markets, is a situation in which capital cannot be accumulated through circulation. That there is an equality condition, that like for like, equal value for equal value in perfectly functioning markets. Accumulation is about an expansion. Therefore, capital is about an inequality which must be constructed out of an equality. Where does the inequality come from? Well, it comes from the commodification of labour power, but it also comes from this other process I've been talking about, which is actually downright thievery and robbery in product markets, and particularly asset markets. So that, if you like, is another aspect of the dynamic, where the contradiction between inequality and equality starts to become very, very, very significant, and we can see how that contradiction has been changing over time and got to this point to absolutely astonishing levels of social inequality and astonishing levels of inequality of class power. And, you know, that's what Davos is about, that's what, you know, all these things are about. So, again, what you would say is that political power, that class power, is, of course, being utilized very much to sustain all of these other contradictions which exist. Because the pattern of those contradictions and how they've been worked out is very favorable to the formation and continuation of that class power. So, politically, this then becomes a critical part of what the system is about. There is then another contradiction, which is a very interesting one, which is the one between production and realization. Marx argues very explicitly between Volume 1 and Volume 2 of Capital that you cannot understand capital without seeing it as a contradictory unity of production and realization. Most Marxists read Volume 1, which is all about production. Hardly anybody reads Volume 2, which is about realization. And you find completely different analyses coming out of Volume 1 and Volume 2. And I can simply say that if you are in good shape from the Volume 1 standpoint, you're in very bad shape from the Volume 2 standpoint, and vice versa. And to put it historically, capital was working pretty well on from the volume 2 standpoint between, say, 1945 and the mid-1970s. In other words, there was no problem of realization. Demand was being managed. It was demand management. It was Keynesianism and demand management. Then the switch occurred with the neoliberal kind of trend, and one of the reasons the switch occurred was we were not doing very well in terms of the volume 1 analysis. Because what the volume 1 analysis demands is that the working class be totally suppressed and reduced to a state of abject poverty. And it was not being, that was not what was happening to it, 1945 to 1975. It wasn't doing great, but on the other hand, it was not doing badly either. And it got too rambunctious. We started to challenge capitalist class power. I mean, there were communist movements. There were, there were very radical movements around. And therefore, there had to be working class repression. So along comes Thatcher and Reagan and Pinochet and all the rest of it, So we then move to a kind of a volume 1 strategy which kind of says suppress the working class, reduce their wages, raise profits, do it by any means you possibly can. But the result of that is there's a question of where's your market. The volume 2 question then starts to become big. Well, it was partly covered by, of course, the credit system. So we then get a very interesting time in which you paper over the distinctions between volume 1 and volume 2 by the creation of an alternative kind of money. Now, money has evolved, and I come back to the money question. Money has evolved, so we now have credit monies. And we have credit monies because we need the credit monies to square the circle between production on the one hand and demand on the other. And again, housing is a very interesting example. You would find financiers in California who would fund the developers to build tract housing. The developers would build the tract housing and then say, where's the market? And the same financiers would turn around and lend to people to buy the housing. In other words, the credit system was sort of sitting up there managing both production and demand. And if there weren't the people around with good credit to buy the housing, they'd drop the credit standards. And so down came the credit standards, and subprime started to come in and all that sort of stuff. So there is a way in which you start to use the monetary system to play around and stabilize the system by managing both supply and demand at the same time within certain kinds of markets, particularly asset markets. Now this to me is a very interesting because it has another, I think, very important sidebar. Where profit is produced is not necessarily the same as where it's realized. There's a tendency amongst many people to sort of always look at the point of production. The profit, okay, let's accept Marx's thesis that that's where surplus value, that's where value is really produced. And if that's where it's produced, then you would imagine that's would be where it's realized, but it's not at all. Look at the relationship between Walmart, for example, which is a merchant capitalist organization, and the direct producers in China. The direct producers in China have extremely low profit margins because Walmart can squeeze them like crazy, and their prices are way, way down, and then Walmart takes all of the profit margins that were produced in, the profit that was produced in China flows into Walmart's pockets in the United States. The same is true of the banks. They don't produce the profit, but they can actually suck it out. And the same is true of the landlords. They can suck it out too. So what you'll actually find is a situation in which the surplus may be produced here, but it can be sucked out by the banks, or it can be sucked out by the merchant capitalists, or it can be sucked out by the landlords, it can be sucked out by the state. So you have a completely different world of realization of where you have to look at as to where the high points of exploitation are really occurring. And this can actually take place even with respect, particularly with respect to working class. Working class can fight for higher wages at the point of production. It can, under certain circumstances, get higher wages. Then it goes back and suddenly it finds its rents have gone up. Suddenly it finds the cost of having a telephone goes up. All kinds of things like that go up. So the bourgeoisie, if you like, loses money at the point of production and regains it at these other points. And there are different factions of capital that are engaged in this process of realization. In other words, exploitation in the field of realization has a completely different logic and is not associated with the point of production in the same way as the creation of value is associated with the point of production. And so when we start to analyze the contradictions that come out of this, we start to see uneven development of the points of realization. Now, what I've done is to briefly go over what seem to me to be 7 foundational points where capital contradictions lock into each other. That is, the reproduction of capital depends upon a satisfactory way in which that relationship between production and realization, that contradiction, is worked out. They're all codependent upon each other. And what you would imagine in a stable situation is that the contradictions, that something that might get out of control here would be counteracted, as it were, by the others kind of blocking it. You would think that in a stable system. The problem is, of course, what I've mentioned is the compound growth issue, where this system cannot possibly be stable. Therefore, what happens is that the contradictions feed upon each other and blow each other up. And if you go back and ask the question, where did the housing crash come from in 2008? Well, you can look at the use value, exchange value. You can look at the way in which the monetary system invented new forms of fictitious capital to manage supply and demand in realization and production. In other words, it worked on that contradiction. It also caught up this whole kind of question of private property in the state, and the state, particularly in the United States, became a vehicle for promoting home ownership for very specific kinds of reasons. I mean, from the 1930s onwards, again, there was a huge state push to promote home ownership. That is, to promote not the housing as a commons, but housing as a private property element. And that also connected back to the way in which the exchange value started to be utilized in housing markets in certain ways, and the state unquestionably was implicated deeply in the crash of 2008. And of course, private appropriation of social power in housing has been significant, and it's going on right now. I mean, the big guns are moving into certain places and they're just buying up foreclosed houses like crazy. And they're warehousing them, sitting there waiting for the revival of the market, and then they will go in and make a killing. I mean, this is what they had earlier done in Southeast Asia with assets there in 1998, 1999. This is what, this is a classic kind of tactic. So what you see is all of these contradictions which are there were implicated in the way in which that crash came about. And politically, what this says to somebody on the left should be, okay, if you're anti-capitalist, you've got to think about having a vision about an alternative on all of those issues. What's the alternative form that you would like to see money take? What is the alternative form of the balance between use value and exchange value? What is the alternative form of the state-private property relationship, and could we replace it with a common property management structure? What of the class relation? Can it be dissipated, turned into, if you like, the power of associated labour, as was initially envisaged by Saint-Simon and many of the others utopians sort of way back? Would it be possible to do that? Would it be possible to actually construct market systems where equality rather than inequality is the centre, and where accumulation is impossible? Would it be possible to do that, and if so, how? And how could you deliver, through production and realization, the necessary use values to people so they had a decent standard of life? These are the kinds of questions. Now, I'm not arguing that somehow or other we just go out there tomorrow and we say, okay, do this, 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 this. But behind if capital is in serious difficulty, which I maintain it is, and we can debate that, if it is in serious difficulty, if there is a pressing need to envision some kind of alternative, then one of the ways to start envisioning that alternative is to think about alternative ways in which those contradictions can be displaced, reconfigured into an alternative kind of society. That is, somewhere down the road, we would end up with a society where exchange value was no longer relevant. We would end up in a society that would have a moneyless economy. Okay, but that may be 100 years away from now, but at least it has to be in our heads that that is the direction we've got to head. That's the direction we've got to take. We've got to take a direction which is actually about maximizing the flow of use values to populations in need. And to hell with the exchange value aspect. We've got to start thinking in those terms. And so what comes out, it seems to me, of this analysis of the contradictions of capital is not a solution to the contradictions of capitalism, but is one aspect of a politics that can actually start to think about that alternative which is not hit with those fatal contradictions of endless compound growth, of a metabolic relation to nature that is clearly crashing and in danger, and of universal alienation in the sense that meaningless work has become so common, pathologies are emerging all over the place. I love Keynes's comment about, the pathologies and semi-pathological and semi-criminal behaviors of the financiers. So when we get to that point, well, at least we've got an alternative way, a framework in which to think. And so part of what came to me as being very important about this particular work was precisely to derive that some sort of general framework towards which we might work and around which we might frame our politics, so that those people who are looking very much at the idea of common property rights as being crucial to expand can locate what they're doing in relationship to the other contradictions. Those people who are actually looking at things like recuperated factories and cooperative factories and associated labour can see the weakness of their position because they have not actually thought about the alternative monetary forms that might be needed to make this system that they are trying to invent work. So it's both the connectivities between the different contradictions which are significant, but it's also, to me, the vision, so that you don't think that just one aspect of this is capable of changing the whole dynamic. There are many things happening across all of those particular issues that I've talked about. Many things happening. The question is how to put them together, and I think Marx's analysis of the dynamic relations of the internal contradictions of capitalism, not capitalism, but of capital, that is something we can learn from by studying it more carefully. Why don't I leave it there? So thanks very much.